Welcome back to Markets Today. If you're just joining us, we are trying to look at and understand the financial trends in the banking sector. Now, this is a very timely conversation in light of the fact that some of the analysts out there estimate the banks will lend out about 300 billion to the banking sector. How will this happen? How will the banks avoid getting hit with non-performing loans? And really, what should you look out for in terms of product offering with regards to finance and the integration of financial services and technology? With us in studio, we are joined by Mr. Kevin Ayugi. He is the head of digital channels at Family Bank. Welcome to the show, Kevin.
Thank you.
Now, when we're talking about financial technology, looking at the integration between the financial sector and the mobile sector, what are we looking at? How have we gotten here and where are we going to?
Okay. Suddenly, technology has come in to fill a need. This need is customer driven, where the customer now wants to be served at their point of need and not necessarily at the bank's convenience. So we've seen a lot of transaction migrate from the traditional bank setting into the digital setting. The advent of the telcos playing into this space has also enabled and entrenched digital banking in the industry. So the telcos began by using the USSD codes that were not well understood from
So this is your SMS?
Yes, this is your SMS method of accessing your banking services. We've also then migrated into the use of apps and internet banking as well. Telco still playing a major role. Right now, proliferation of smartphones is up to almost 70%.
Oh, wow.
Penetration of internet access as well is up 85%. So this are very key enablers for the banking sector in terms of how we are able to spread out and actually offer the customer service.
Okay, yes. So this is a situation where the banks have been able to leverage off the technology of the mobile companies to provide a service. Is this something that we expect to continue, or could banks get to a point where they're completely independent of the telcoms?
So it could go both ways.
Right.
I also see a lot of telcos continue to gray that line. I see one or two telcos in the near future applying for our virtual banking license. The competition is just not coming from telcos alone. It's also coming from credit-only microfinance institutions who now feel they have earned their seat, their place in the table, and would like a seat.
Okay.
So they've also been applying for virtual banking licenses.
What does a virtual banking license look like, and who issues it?
So the traditional banking setting is that you have to have certain capital adequacy ratios in place. You have to have physical presence. So virtual banking licenses allow you to operate as a challenger bank. This means that you have no presence whatsoever, and everything you do is online.
All right.
So we've seen a lot of this successes in Europe, and we would like to see one or two then spring up from an African perspective.
Would this then be licensed by the Central Bank of Kenya in Kenya?
Yes. Everything has to be regulated and licensed by the Central Bank of Kenya. The good thing is that the credit-only microfinance institutions have taken the initiative because they understand how the environment works, and they've actually set a body where now they're self-regulating.
Okay.
So even from that perspective, banks are now supporting and welcoming it, because then the collaborative efforts become a lot easier to then deal with.
All right.
Yes.
I mean, just pardon me, because I'm really interested about the virtual banking operation.
Yes.
And I'm trying to, is that a conversation that CBK has started having?
Yes.
Have you heard of anything in the pipeline with regards to any possible change to existing regulation to accommodate such an eventuality?
Yes. Currently, no. It's still in the experimental phases.
Okay.
So what some of the mainstream banks are doing is they're having breakaway brands that operate still as the part of the larger bank.
Okay.
So it is a sub-brand, doesn't operate with its own license, but suddenly goes to the market as a completely different flagship brand.
Okay.
Yes.
For example?
So for example, KCB has managed to go into the market with a brand called Fuma, which then is a pseudo brand to the main brand. Barclays, you've seen, have also gone into the market with the likes of Timiza, and they're able to then actually cut across the market verticals using some of these breakaway brands.
All right, very interesting. So everybody's trying to figure out a way of, I mean, really the customer is the end point.
Yes.
And finding a way to be able to provide services. Now, anytime we look at the financial trends financial technology in the financial sector, it's a bit vanilla, because the first thing that you can be able to get access to credit. And some of them have been able to enhance savings for you, meaning that you have to save before you can extend. But then you have said also the onset of microcredit facilities. Now the question is there a shift or a possible trend to where we get over and above just plain vanilla products and start getting into investment type products or other additional financial service products over and above what we have?
Correct. The vanilla product is driven mainly by the fact that customer ownership right now is terminated at the bank. So if you have the customer, you own them, pretty much you own their data. Legislation is now moving. You've seen stuff around data protection then come into the markets. We're moving into a space of open banking, where as long as the customer is registered either with IPRS, which is a government database for registry, or they're registered with Safaricom, you're then able to verify that data as long as you get customer consent.
Okay.
That will then now move into personalization, where I can actually make a bespoke product based on the footprint that you have, because that data actually belongs to you.
All right.
Right now, if I want to then make you a product, you have to go to your bank and then ask for statements and then come back, etc., etc. So from an open banking environment, I'll be able to access that data right from a database. Then the banks are not avert to lending. The problem is on the NPL book, the non-performing loans. One way we've seen the industry move away from that is needs-based lending.
Okay.
So if I can facilitate the need that you actually want, we've seen that customer pay is a lot better, because then you're actually giving it for need and not for consumption.
All right.
Yes.
What does that mean? So how would you evaluate my needs? If I come to you and I say, for instance, on my mobile phone, I feel like I want 50,000 shillings.
Yes.
How do you differentiate my want for 50,000 shillings to a need when you give me 20,000 shillings?
Yes. So credit scoring is moving away from how many loans do you have, how many have you paid, how many have you defaulted from, into some sort of behavioral science. So where do you hang out? Where do your kids go to school? Where do you live? This entire footprint is available online. As long
does
as
M-Pesa share that? Because I know M-Pesa certainly has like, this is where you were at last night, paying for dinner, or you paid for school fees. Is that information from Safaricom openly available to anybody else?
No, it's not.
It's proprietary still?
It's proprietary, and with the data protection, it'll get even more secure, largely because without customer consent, then you can't pretty much move.
Okay.
But this data is available, I should say, even with the banks that currently have them. Banks have not moved into big data, largely because the core banking systems that were purchased, should I say, a couple of years back, are not able to talk to any of their mission critical and zero-layer systems.
So there's really no interoperability.
So there's really no interoperability.
Okay.
So all the data is available, but it's not consolidated. So then I can't get any insights, and therefore I can't serve you at your point of need.
So then what changes? Because we did see PesaLink coming in and trying to address the issue of lack of interoperability between the banks with regards to everybody has a different system that cannot face another system.
Correct.
Is that something that is going to change, or is PesaLink something that was good to know back in the day?
Yes, PesaLink was something good. It can be something great. Largely because right now it is limited to money transfer. If it can then facilitate payments, then it suddenly becomes great, because then the utility is a lot more. The other thing I can say from a technology standpoint is, if we're able to get 3 or 4 technologies in place, this is your artificial intelligence and machine learning, this is your big data harnessing, this is stuff around cloud computing, then we're able to look at the customer from a 360-degree view. That way we're able to offer you a lot more than just the vanilla product.
Do banks understand that language? In practice, not in theory. Because we keep going for investor briefings and we keep hearing behavioral science, artificial intelligence. You know, we can understand what these things are, but we are yet to see what banks are doing. Or let me actually ask it differently. Based on these 4 things that you've mentioned that need to define the future of the banking sector, which bank, in your view, is actually ahead of the pack with regards to adopting some of this?
Right now, I'd not say any bank is ahead, largely because it's still experimental. Central Bank has not yet given a directive on how banks can go into cloud. Before, there was some restriction to it, as long as it was core systems that then had customer data. And a lot of banks' data is customer data anyway. So until we are allowed, from a regulatory standpoint, to then go full into cloud computing, we'll be able to exploit a lot of these opportunities. Right now, everything has to be segregated into a physical server, which makes it very expensive and makes it very hard for banks to have elbow room around it.
So What is the core banking system then that a family uses? We know for some of the listed banks, we've heard of the likes of FinServ, the likes of T24.
Correct.
At least those are the names that we keep hearing.
Yes.
So is that something that also your bank uses?
Yes. Currently at Family Bank, we use Oracle,
Okay.
which is your FlexCube system.
All right.
Yes.
And is that common? Do other banks use it? Which is the most common in the banking sector?
So currently you have FlexCube and T24 as the market leaders, largely because they're built on objects, so it makes it easy to change and upgrade as you then move along.
Okay.
Yes.
And would these systems be available for an upgrade, say for instance, if the regulation changed and allowed for artificial intelligence, big data, mining of your data, would they be able to facilitate this capability?
Correct.
Okay.
The systems are upgradable, but what we need is a layer that sits under the system, such that any integrations, any partnerships, any collaborative efforts don't have to plug in directly into your core, because that's where the upgrades and all these other things come from. So if you have what we call a universal bus that sits, it's a middleware that sits right under your core system, you're able to integrate any of the partners. So that's where banks are moving, as opposed to just trying to upgrade their core.
All right, interesting. So for Family Bank today, when you sit as the head of the digital channels, how do you interact with your customer? And is your customer satisfied, or is it a highly competitive environment if you compare your offering to the other banks?
Correct. So at Family Bank, we run a hybrid model. We're one of the larger banks in terms of footprint, so we still have a very big footprint of about 90 branches. So what we try to do is find a very unique balance, should I say, between who accesses digital channels and who accesses mobile only channels. The other way we've also tried to bridge that gap is through agency banking, because then you're not really in a physical branch, but you're still interacting with a digital device. So once customers get into that mindset, because we've seen the most important thing in terms of digital proliferation is around customer education. So the more customers are aware, the more customers know that these channels are available, and that the customers actually trust and believe that my transactions will be secure, then we'll see proliferation of digital banking go a lot higher.
Okay. So how many customers does Family Bank have?
Currently, we're just shy of 700,000.
700,000. Are they? Is the majority of the 700,000 using your digital channels? Are they converted?
Correct. So currently, we run about 80% of all our transactions digitally. Only 20% then are run from a branch perspective.
Okay. And in your channels, are you integrated, or are you collaborating with the likes of Safaricom? Because at least we've seen like KCB and PESA, we've seen what NCBA has with its M-Shwari offering. Is that something that we're able to get from Family Bank?
Yes and no, largely because we're trying to be an open player to everybody who plays in the fintech space, as opposed to limiting ourselves to the telcos. Yes, we do partner with the telcos to a large extent, because we offer them float management services from our distribution channels.
All right. So you're a service provider.
Correct.
Okay.
So it's a symbiotic relationship in that we do provide some services, but we get a majority of services from them as well.
All right. WeChat. I think that's an interesting one. Please walk us
Yes.
through that.
So we've seen a lot of business shift from the UK and the US. We still do money remittance from those two regions, but we've seen a lot of business then now go into Asia. So the interesting thing about Asia is a lot of the people in China don't have bank accounts. They actually terminated wallet, and that's how they use WeChat. So we thought it was very interesting to then get a partner who then can facilitate those transactions for us, largely because we've also seen we have a lot of Chinese nationals who either come to work or come to do business, and from time to time want to transact with people back home. So currently we are enabling those transactions, and we hope to see that business grow a lot more.
So if, for instance, if I wanted to import goods from China, maybe beauty products or some random products, would I be able to use WeChat to connect to my seller and make the payment?
Yes, you can use WeChat. We also offer e-commerce services. So depending on the partner that you're using to purchase. For example, the popular e-commerce platforms are like AliExpress and Alibaba. So depending on the partner you're using, we're able to facilitate either both from an e-commerce perspective as well as from a direct channel enabler through WeChat.
So like for instance, AliExpress, would I download the Family Bank app, and then if I download AliExpress, do I get the option of use my family bank account?
No, unfortunately, AliExpress, you have to be integrated.
Okay.
Yes.
All right.
So it'll only allow you to then put in the payment facilitation at checkout.
Okay.
Yes.
Okay, interesting.
Yeah.
There's just a lot happening in the banking sector.
Yes.
Okay, so this is, I mean, there's a lot happening, but maybe you don't have to answer this later, but it's something to consider.
Yes.
What does it mean for the bottom line? I mean,
Yes.
what is the trend? Are we seeing then banks moving or being forced to move to integrate with technology to provide service offering? And really, in 5 years, are we going to have banking halls in the year 2030?
Yes. Someone said something very interesting, that banking is necessary, but banks are not.
Yes.
So we are going to see banks get into a hybrid model where you have a 24-hour service self-serve center and have a back end that then only does very small operational items.
Okay.
So what technology then allows you is, with the margin compression and what we've seen around the rate cap, is to create a lot of efficiency and drive the cost to income ratio down to a manageable level.
Okay.
So that way you're able to still provide the services to the customers without necessarily going back to interest income as your fallback plan.
Okay.
Yes.
And how does Family Bank's cost to income ratio then compare to the industry, for instance? Is it getting better, and what are the plans maybe for the next 1 to 2 years?
Yes, certainly it's getting better. If you look at our performance last year, we are on an upward trajectory. We did have a slip about 2-3 years back, but we have suddenly been very deliberate about saying we're back in the market. We did have a tagline once that we're the fastest growing SME in the country, SME bank. So we want to recapture that this year.
Okay.
So you will see a lot of efficiencies around how we then roll out our digital channels, our collaborative partners in the coming months.
All right. Yes. And then we'll take a short break. Look out for the closing bell and don't go anywhere.